kind of want to pull on a couple of threads that you dropped as you were explaining your thought process there. You mentioned resource in describing Bitcoin, and you also described it earlier as a store of value. And obviously, I don't have to tell you guys that there's a lot of people that would like to take the opposite side of that argument and say that Bitcoin is neither of the two. So I was wondering if you guys might take a stab at making that argument. Why would investors see it both as a store of value and perhaps as a resource as well?
Well, the store of value, I think, is relatively simple. Like, we've never had an asset that's got defined scarcity, right? Even gold, you can go mine more of it. It's whatever it is, 2% a year comes out. You could get more if the price signals to the market, you should get more. So I think I don't think we have to overcomplicate that side of it. There's lots of question marks. There's so many so-called Bitcoin myths about why you might not be confident in, the 21 million or the Bitcoin network, which we could spend a good, day and a half debunking all of them. And I guess we're in the process of the market working through them, quite frankly. But yeah, I mean, I think if you can get yourself through the Bitcoin myths and get over the hurdles, right, it's not backed by anything, right? I mean, but what is money? Is money as an informational technology? Where does it say you have to have intrinsic value? Nowhere, right? Scarcity is that quality, and I think people confuse intrinsic for scarcity. And then there's all the other qualities, which we don't need to get into that unless we want to. But so I think there's a discovery process obviously going on, but it is I fail to see none of the Bitcoin myths. They're all exploded for me. Obviously, I've got my own comfort on that. Obviously, and then there's the. And by the way, thank you for the Zeckhauser. I actually ended up reading that paper because of you, Matt, which was great. I hadn't seen any work kind of in that type of framework, which just makes so much more sense for, for how I think of the world. And so it was very helpful. But I mean, there's so much unknowables and unknowns around Bitcoin. But I just can't. So I can't conceive, I guess by definition, they're unknowable, but beyond that, I can't conceive of how it fails. If money converges, or if economic systems converge to one form of money, and this is the best form of money, which was sort of the original thesis and the eureka moment for me, then that's the thesis right there. That's the store of value, and it just seems like the world is waking up to that. There's been nothing I've seen that's contraindicated any of that. And so I'm interested, Matt, in why you think it's bearish on the Michael Saylor. I think that's an interesting place to go.
Well, maybe I misspoke. I don't necessarily view it as bearish per se. In fact, it's probably quite bullish. But I just I suppose our take is a little bit contrarian. And as sounds like you've probably gone down the crypto Twitter rabbit hole, and
probably too far.
Probably too far. I certainly don't recommend it for anyone, or everyone rather. Certainly not those that are more faint of heart. But it's there is a I think there's an insecurity that kind of underpins the space, and it's understandable because this is a space that particularly in its early years was it was really kind of the cyberpunks and then the misfits and what have you that are a little bit lying outside the system, right, and on the periphery. Yep. And so, but that also means that there's a very strong sense of solidarity, right? And but within that solidarity, there's a massive echo chamber. And so anything that could be viewed as potentially bullish or supportive of Bitcoin, therefore must be good, right? No matter what. And I look at the case of MicroStrategy without going into too much detail, but I just kind of wonder, okay, so they basically just allocated, first of all, what's the purpose of a treasury function? And the second question would be, they just allocated 98% of their net cash to a single asset. right? Which happens to be one of the most volatile assets in the world, right? And so that in and of itself, I think should certainly raise some questions as to the responsibility of an action like that, right? If my friend were super bullish on Apple and told me that 98% of his liquid net worth was invested in Apple, I'd be like, maybe, yeah, might want to diversify a little bit, not, so that's one element. And two, it's, I just find it interesting. MicroStrategy came out of the blue. They had nothing to do with crypto as a business. Michael Saylor had nothing to say about crypto. And then all of a sudden, he's now kind of the hero of the Bitcoin universe, tweeting every day about Bitcoin. He's tweeted more in the past 2 months than he has in the past 3 years. And so I just think it's kind of interesting. And if you look at their share price up until the point that they purchased Bitcoin versus what the share price has done post that acquisition, I just think it's kind of an interesting chart to look at, right? Now, that's not to say it's not a brilliant strategy. I think it is commercially, and it could turn out to be a phenomenally successful strategy and one that's quite profitable for everyone involved. But I just kind of look at it and I'm like, well, that's just sort of an interesting thing that happened. But the Bitcoin space loves it because it's bullish and it sort of fits into the narrative.
Yeah. Look, I think the echo chamber, I think, is a great point. I'll make a couple counterpoints to that. So the treasury for MicroStrategy, I guess at least as per kind of Michael Saylor's version, he didn't feel like they are getting value in the public stock for the treasury. And I guess they don't need that cash, right? It's just kind of accumulating. They don't need it for working capital. They don't need it to run their business. So I think it's fundamentally a little different for them to allocate 100% of that versus, your theoretical buddy who was allocating his, maybe his net worth, right? Where there's true kind of risk if things go pear-shaped. But you're absolutely correct. I think in the other respects, like he has become sort of this emblem for Bitcoin Twitter, or whatever you want to call it. So the echo chamber is big and it's loud, but the thought process that Michael went through, right, and he's been on every podcast I think that exists out there in the last couple of months, is exactly the thought process that I believed any intelligent capital allocator would go through. And he's very articulate in going through, okay, well, if it's not cash because it's, it's a melting ice cube, is it gold? Is it stocks? And he goes through all the reasons why it isn't. And then you get into why Bitcoin versus any other altcoin. And he actually brings, I think, some interesting kind of new ways of looking at it in terms of saying, look, this is 100 billion plus market cap, and that's very similar to other, dematerialized networks, and citing Apple and Google, that's a threshold sort of size, and Bitcoin is dematerializing money in the same way that we dematerialize these other networks, and massive value was unleashed. And who knows, right? But I think that is new into the dialogue. And this isn't, he's got credibility and a history in this space. And he's got a history of being very vocal about things and not right about everything. But I think those are very interesting. The fact that he shared his thought process, I feel like other people will go through that journey as well. So for me, that was important.
Look, I think he's done a great job of shaping a narrative. I think he's done a great job of talking his book, as we say. And I'll just leave you with one sort of point of comparison, which I think is important to consider. So a few days after that acquisition, Square came out and announced their own. Their allocation to the space was 50 million. They purchased 50 million worth of Bitcoin. On, I think their cash on hand is $2.5 billion. They've got, I think, $2 billion of debt. So it was 10% of their net cash, right? So 10% versus 98% is a meaningful delta, particularly when you contemplate the fact that Square is a business that derives a meaningful percentage of its revenue from Bitcoin, right? Yep. Mm-hmm. And Jack Dorsey, the CEO of Square, as you know, is also CEO of Twitter. Yeah. And he has one thing on his Twitter profile, which is Bitcoin.
Yeah.
So that I think is interesting to contemplate.
I think that's a study in personality contrast, and it probably speaks to the ego and let's just call it focus, to be diplomatic, of Michael Saylor.
I just think it's,
but I don't think he's wrong either.
I don't. Yeah, look, he'll probably end up being proven totally correct, and this will be a brilliant strategy. But outcome bias cuts both ways, right? Just because the outcome is a positive one, doesn't mean the decision making was.
Then what's the downside? It goes to zero, and you generated another couple $100 million presumably from your business in the meantime. So maybe it's maybe it is a brilliant strategy. Well, time will tell.
Yeah.
Well, it's interesting, right? The idea of this is narrative economics. So I like to talk about the Rolling Stones and probably the band of our era, the one that represents the music that we most listen to, but they're no Mozart. They haven't been around 500 years. Gold's been around 5,000 years. It has a proven track record to hedge inflation, to give us that inflationary hedge when we get into sort of MMT type scenarios, which we're in now. So if we think about the global macro scenario, I wonder to what extent, money being a store of value, a unit of account, or a medium of exchange. I mean, those are the three things that create money. And I think the unit of account's probably pretty good. We can all agree. I mean, 10 minutes might be a longer time than you want to, with the technology is going to improve. The medium of exchange and the store of value are the two things now that they're sort of interwoven as compromising one another. If your volatility is too high, that compromises the ability to have a medium of exchange. If you owe me X dollars on an invoice or X Bitcoins on an invoice, and that's going to vary by 20 or 30% between my billing and my receiving, that's a bit of a challenge, both for the unit of account and the store of value. So, but again, it's early stages, but what do you guys think of that side of it? Like if we're going to argue that Bitcoin is digital gold, I suppose, gold's not worth anything either. It just, I can get a brick of it and I can hold my door open on a windy day, but there's no economic use to it. And it's just the perceived notion of that value of the commons, if you will. And I guess we're crossing that labyrinth for Bitcoin. Is that what we're supposed to believe? I'm taking a bit of a skeptic's point of view here, only just for a moment, just for fun. But what do you guys say to that type of question or discussion?
I've got a lot to say, but Matt, you should take the first crack at this one.
Yeah, sure. So look, I think in my mind, the way I think about it is the current use case and the future use case. And we're speaking about Bitcoin in particular at the moment. And obviously there's plenty of other digital assets out there. But so in the case of Bitcoin, in my mind, the primary use case at the moment is purely speculation, right? And I think entertaining the possibility that folks will use this for transactions. I know some of the hardcore believers do. And in fact, I've done it myself, but the reality is for an asset that's so volatile, as you know, it's hard to use it as a medium of exchange, right? Now that may change in the future. I myself am skeptical that governments will allow that to happen. I think, the render under Caesar, I think it's going to be hard to expect that the US government or China or whomever will be willing to sort of give up control and allow for this currency to facilitate transactions. Not because, it's super, the reality is Bitcoin isn't super private. I mean, you can actually audit the trail, the transaction trail pretty easily. It's more because they just need to control the monetary supply, right? And they need to know what that looks like. And I think giving up that sort of control is going to be hard. Now, it's totally possible. I mean, people peg their currencies to the US dollar, right? Countries do that. And they give up complete control of their monetary policy on the back of it. So there is every possibility that the Venezuelas of the world and so forth could do the same, right? And that'll create a pretty interesting situation. But I view, that as sort of down the road. I think if Bitcoin achieves some sort of critical level and volatility gets stripped away a little bit, and people will be less likely to be incentivized to use it as a medium of exchange, then that could certainly happen. But for now, it's purely speculation, right? People are owning Bitcoin because they think it's going to go up in value. I think in the future, the only use case in my estimation is store value, right? This notion of digital gold, this digital scarcity, which Rob referred to. I mean, this is what's attracting the Paul Tudor Jones of the world and so forth, is the possibility that this thing could serve as an inflation hedge, which means, something that could actually retain its value over time in the midst of all the other madness, going on in the world. But that in my mind is again contemplating a theoretical future state, because we just haven't seen it yet. But it's certainly that's really kind of the primary impulse, and that in my mind is what's going to attract, the smart money, the Paul Tudor Jones, the big institutions that come to the space. Michael Saylor obviously has done it in a pretty big way. I think more and more people are going to latch on to that store value notion, and that'll be what drives real adoption over time, in my mind.
Yeah.
Sorry, go ahead.
And so
I think Rob's going to.
We've got a question too. Like, how does the value of the asset?
I think we're getting a little bit.
I'm getting a bit of a slow connection, so I'm gonna.
Yeah, that's
you go ahead.
I'll respond and to your original question, Mike, and then we'll see if you're kind of back on stream. But yeah, I mean, I would largely agree with Matt. This is definitely a speculative store value at this point, by and large. There definitely are use cases as for a medium of exchange. Forget unit of account. The volatility is off the chart, so it just makes no sense to really price anything for any length of time in it. That's probably a long way off. So yeah, it's speculating that this will continue to be used as a store of value. Speaking to the government side of things, which is one of the big fears, I think absolutely you're going to see continuing bans. I mean, China's banned, they've unbanned, they've banned, and they've rebanned again. Expect that soap opera to continue, and we'll see that. And I don't even think we've seen the beginning of the real battle with governments, because this is ultimately, if you believe in it as a store of value and it starts actually increasing in value, then you're going to run head on with the central banks of the world. And I think we all understand that they are in no way, shape, or form willing to give up the ability to print money, which is the seat of their power more than anything. So that battle is coming. And this is why it's very important to be a decentralized network. And this is why the altcoins that don't have this decentralization, where they have figureheads, actual people that can be, subpoenaed, jailed, whatever, you need to be truly decentralized. And Bitcoin is the only network that comes close to a true level of decentralization at the mining level and the node level, and for that matter, the developer level, although that might be kind of the most easy vector of attack, is actually attacking the developers and the GitHub repository and things like that. But if you don't have that, then you're more vulnerable to it. What I expect to see is jurisdictional arbitrage, and we've already kind of seen that kind of in a light version. Or as I said, we've seen China, we've seen India ban it, we've seen lots of countries ban it, and then they flip-flop. You're not going to see every country ban it at the same time. And if they do, if one country bans it, they're banning it because it's working, not because it's not working. So that is an endorsement. So, okay, if you want to ban it in the U.S., go ahead. We're going to Malta. We're going to Argentina. We're going, maybe not Argentina. They'll probably fight it pretty hard, but they'll go somewhere.
Rob, on that a little bit, because I think from a sort of reflexive argument there, the very fact that it's super decentralized and kind of outside of the purview of the monetary system might be the major hurdle for it to grow into the institutional space because of what you're describing. So right now, Bitcoin is what, a 220 billion market cap, give or take?
No, like 240 billion, roughly. 240
billion. Okay, so I got it wrong by an order of magnitude, but it's still
super small though by any measure.
Yeah, and the diehards, the cypherpunks, they're going to hodl their satoshis, and they're probably not going to want to use it as a medium of exchange. And Matt was describing people in Venezuela. They're probably going to want to actually use it as a way to escape hyperinflationary scenarios like that. But once it's no longer flying under the radar, and it does become a real threat to central banks' abilities to keep the party going in the manner that we're seeing, and now MMT within the Overton window, probably coming into policy sooner or later, isn't that going to probably scare away some of the bigger institutions that might bring this asset class into the next stage of its evolution, as you guys are describing it?
Well, it's already scared them away. They're just coming around one by one. So yeah, it's a completely novel asset. There's no precedent, right? Currency is issued by central banks and countries. That's what we've known for the last 200 years. And so now you've got to get your head around the fact that it's a bunch of cypherpunks that have, an open source development and people running nodes somewhere, some way, and Chinese miners in whatever you think it is. You've got to get your head around it. But if you don't, then you've got to look at kind of what the reality is that you're left with. And the reality is crazy MMT and buying ever escalating overvalued assets or becoming more and more of a speculator. I mean, this is what is driving people and thereby and ultimately institutions to it. We're all forced to be speculators, crazy speculators, because the money printing is distorting the price signals so much. So how do you at a certain point, the pot gets so hot that you start thinking outside of your normal, paradigm. You're like, well, how can I avoid, and we've seen that in countries where things are more advanced. We've seen it in Argentina. We've seen it in Venezuela. We've seen it in some of the African countries, right? There's big premiums in some of those countries to Bitcoin because it's needed now. So you're right. Like, yeah, this is not something that, the masters of the universe who run these hedge funds, they don't really probably want to contemplate it. But if they don't, at some point, the world's going to flip potentially into pricing everything in Bitcoin. And then your returns aren't going to look so good.
Matt, you want to take a crack at
Yeah.
Or are you fully in agreement and Rob's?
Yeah, I mean, look, I appreciate Rob's enthusiasm, and I think it would be it'd be amazing for all of us if assets were one day priced in Bitcoin as opposed to U.S. dollars. But I think the most realistic long-term kind of strategy for Bitcoin is just to go away from the medium of exchange side of the equation and just focus on the store of value and be happy with that. And I think, thinking about the U.S. government and other governmental authorities who want to retain control, it's sort of the boiling frog, in the water. Just allow it to sort of slowly chip away at the periphery. What is gold, an $8 or $9 trillion market cap today? Bitcoin is 250 billion. There's a lot of real estate between there and here. And just let it kind of slowly do its thing and let it earn its stripes. And that's a value add, right? In this moment in time in particular, given all the money printing going on that we've discussed, that store value thesis makes sense. And just let that play out, right? And if it just does that, and more institutions want exposure because of that thesis, and just do away with, we want to be able to go to the grocery store and purchase things in Bitcoin. Let's just forget about that for now and just appreciate it for what it is, which is an emerging store of value. And that'll give you a much longer runway where, the authorities of the world, I would imagine, are less concerned about people deciding, hey, I'm going to own some gold, I'm going to own some art and some wine, and I'll own some Bitcoin, and just let it happen sort of naturally that way.
And maybe outside of the VC bucket, but rather sort of maybe substituting part of the gold, precious metals, that part of the alternative bucket in general. Do you see that as something that might be the reality for Bitcoin institutional holders in the coming years?
So I do. Obviously, I'm talking my own book here a little bit, but
Plug away.
Look, I as referenced earlier, in my estimation, the primary use case right now is speculation. And even when people put statistics up there around, there's been $1 trillion or what have you in terms of transaction activity, right? The reality is all that activity is, for the most part, people just trading on exchange, and so I view it purely as an asset class to trade, right? And of course, I am longer term bullish in terms of the space broadly defined, not just Bitcoin. I think there's so many interesting ways that this space can innovate. I think there's all sorts of crossover potential around tokenization and so forth. I'm definitely bullish, but I also try to be a little bit pragmatic about the here and now. And in my mind, the here and now is, first of all, how often are you introduced to an entirely new asset class, right? Like, when does that happen? Not often, right? And we're witnessing it, and we can trade it now in the here and now. So Bitcoin trades as much as spiders do daily, right? So it's tradable, and it happens to be incredibly inefficient by virtue of the fact that, of course, it is a nascent asset class. You have, sort of developing yet fragmented and very immature infrastructure, with all this, different trading venues across the world, different regulatory regimes, different instruments that can be traded, emerging instruments around derivatives and options and what have you. So there's so much opportunity for, call it arbitrage per se, right? And unlike, the liquid capital markets that we're all accustomed to, that are 90% dominated by institutions, this is a space that's dominated by retail flow, right? And so if you're coming and facing off as a professional investor, whether you're a former FX trader or quant or what have you, you come into this space and it's just ripe with opportunity, right? So I view it as purely an asset class to trade at the moment. And to the extent we think about, what does that mean for us in our business? You've got an incredibly interesting risk return profile available on the back of the fact that this is such an inefficient asset class, right? And there's so much alpha on offer. And that, when we think about what's going on with absolute return portfolios for most investors and their broader asset allocation, there was a point in time when hedge funds could deliver on the original promise, which was to maximize absolute and risk-adjusted returns in uncorrelated fashion, right? But today, as you all know, hedge funds are LIBOR plus, right? No volatility to speak of. Hopefully that Sharpe gets close to 1, and hopefully they're somewhat uncorrelated. That's just less interesting because a lot of the opportunities have been arbed away and markets become much more efficient. Whereas you come here, and it's the early days of hedge funds, right? Back in the days when all the ex-Bob Rubin risk arb guys were crushing it because their spreads were so fat, and then those spreads got arbed away and they became something else. It's the same thing now, like early innings now, for folks that are willing to go out there and set up vehicles to capitalize in a liquid form on an incredibly inefficient asset class. And one more thought on that. We think about it in terms of binary versus continuous thinking, right? So most of the arguments in favor of Bitcoin, for example, are around, this asymmetry, right? Which means, Bitcoin goes up or it goes down, and then with VC allocations, which we love, by the way, because they're helping to fund the infrastructure build out that's required in the space. But VC is sort of binary squared, right? It's betting on the future of blockchain technology, happening or not. Crypto sort of going up as an asset class or going down. Entrepreneurs executing or not, right? So that's very binary in its thinking, whereas we think about things more continuous. So along the spectrum between the denialists and the maximalists lies a whole host of opportunity in between that, they're there purely to trade the chop. Volatility is a good thing and can make money theoretically in up and down markets. And so if I were an institution thinking about attacking this space, I would contemplate that sort of barbell approach, having a less liquid approach that's geared more towards, the future 7 to 10 years on the road, and a more liquid approach where you can kind of solve for both outcomes.